Hello, 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 hello. Welcome to another market update. This is Victor in another ES Futures trading. Non-farm payrolls has come came out. We have we have a spike here, but notice there is absolutely nothing here in the upper side. Really low volume. Man, prices are higher, right? Prices are higher, um, but there is no volume back in this thing. There's no volume. That's the first thing I wanna say here. Remember what we do. What I do is watch, try to understand what's happening first. Right? I have unless I start to see some silver and blue up here, I would consider this a weak spike. With good odds, the market coming back inside this range. Right now, what's happening? This is just the overnight. We have 2 days balance. This looks like long liquidation, but I want to see what happened at the open. We still have 2 more periods here. Uh, if we check, for example, this day here, a couple days ago, this is Wednesday. What we have is this high right at overnight high. Very questionable. This is what we talk, right? There's nothing here. Let's aim. Let's check. This might be. Uh, Hawkeye. I don't want this to be. I don't want this to be something that I am drawing this just as a reference here because don't wanna forget this. This is this rally high here we have on this day. Okay. But this high is very questionable. We have 1, 2, 3 highs, kind of like exactly at half back here. Right? 1, 2, 3, even 4, around this area, around half back here, and then we have some. This is short covering here. Short covering weakens the market. The day that followed, yesterday was an absolutely terrible day. Nothing here to see. There's another. The opportunity. I think there was something here. Not here. Maybe here. No, this was really hard. We have this high. This added weakness to these sellers here. But this was something here that happened when we were during when I was streaming. I mean, it happened after the stream because we saw this area here that the market used to sell, and we were telling that there may be something here, right? But just before the stream was over, we said no, there is nothing here because there was some profit taking in this area here. Oh, here, this area here, and just after that, I have noticed that the same area that was being used to buy, to sell, was being used to buy out now. We got 1, 2, 3, 4, 5, 6, 7, 8 highs around this area, and then what followed 1, 2, 3, 4, 5, 6, 7, 8, high, even 8, 9 maybe. Yeah, about 9 highs in the same area, and then the liquidation. But then we have this huge liquidation that happened, no? Especially having this low here. Now, what do we have now, right? These buyers that came from this level were questionable. Now the same thing has happened after that. Same thing happened. IK, same level there. This one and this one. We have 2 here. I'm not saying the market cannot rally. I'm not saying that. I just try to find out what kind of buyers are here holding this market. Something at the close, we have this pressure, this volume. Can you see higher volume and absorption here? Then let the market go lower. That's why I have this one here. And we have something on the upper side. We have this one and this one over here. Remember where all this came from. This high was POC, overnight POC at the time. The same way that we have this previous day held back, this was overnight POC, kind of like if the market was kind of selling from this area, for example, right? Now, algorithmic trading. Look at how much this period, the current period, extended, right, before retracing. Just enough to move held back to the bottom. This is I think it looks to me this is algorithmic trading. It doesn't mean it's bad. I'm not saying that, but because there is somebody who programs the algorithms, right? These hedge funds that indicates, the programmer, buy this, sell this, until this happen, right? And that's what I believe happened here. There's positioning. There's a lot of sale, a lot of buying also. How many times this market has been bought from seller, and yesterday seller? You got 1, 2, 3, 4, 5 times from that area. Huh? Five times from that side. I haven't done my homework yet. That's what I'm going to do now. I was checking how much this 57.50 puts here. Right. Yesterday, the market was to the downside. The trade was sell the rallies. I have no idea what is going to happen today. Really, have no idea. I have pulled this just to monitor. But if the market opens right now, we are going to have a gap. Okay? Market is opening with the gap. This is a spike. The length of spike can be clearly seen. Remember where it has been bought from, right? Where it's coming from. Now we have support here around July high, multi-time frame references, and this level here as I consider this important level here. Exactly from where the market changed during FOMC. What was used to sell during FOMC now is being used to buy, right? What was resistance now is support. Remember this, what happened this is in the 5 minutes, right? Maybe you are more familiar with the 5 minutes. What was resistance then becomes support. One is taken, becomes resistance again. Right? Sell, buy, sell. Right? It's not that hard. That part, right? That's an indication who is behind. I don't see volume. So far I don't see volume here. Now let's see something else. Look at the volume. Come on, brother. Look at the volume here. So far 55,000. Really low here. Okay. Let's see. Okay. Now, what I'm going to do now is I'm going to do my homework. Yes, I did it. Huh. No, I did not. This is Thursday. Belongs to Thursday, October 3rd review and homework. This is part of the job. Very important part. Let's move this over here, maybe. Most of the overnight inventory is long. It's getting longer here. Still two more periods. So once you where the market opens relative to the spike. Okay? Now, one of the first things. Now I'm going to highlight this something here. This is volume. This day here is what the heck is that? Oh, that's end of the month. End of the month? Yeah, this is end of a really high volume here. End of the month or yeah, it's end of the month. The following day after is that? Huh. Let me check. Let me check something here. Yeah, that's the last day of the September contract. You see that? Yeah. So this is crazy things that happen here. I don't know. There's a lot of things that happen during these days, so better to stay away. Out in the market. Yesterday we have lower volume. Really. What? Today with lower volume. Now this is going to be kind of like interesting here. What the heck? Alright. This kind of days are really hard to. I mean, this kind of news events are better to stay out. I don't know if you trade those ones. Just make an honest assessment of your performance during those events, and over time get a number, right? How many times you were right, how many times you did well, how many times you didn't do well, and how many times you better was, you better consider to stay out, or was better to be out. And at the end, it is worth? That's the question. And that's a question that only you can answer. And you make a decision based on that. I may have a lot of wins, and maybe just 2 losses. I may have 10 wins and 1 loss, but if that loss is 3 times that all my wins combined, so it's not worth. Right? If I have 1 win that is pretty good over a long period of time, and the small losses, then it's up to you. That's one thing. Right? This is the highest better question over here. So it goes to the low, alright? What the heck is that? All right. I have right there. I don't want to take too much screen. All right. The weekly. What's happening with weekly here? What's happening with weekly? Look at me. Weekly. Oh, look at this. It's coming down to a spike. Now momentum has this spike is catching momentum here. Oh boy, look at where it came from. Exactly how back here. It didn't do anything to the downside. Nothing. Look at very narrow range bar here. Oh, my bad. I thought this was one. This is the overall. My bad. No, never mind. Weekly. What do we have in the weekly time frame? One time frame has ended. Market. Well, we have good here. A questionable low. Better high in the weekly time frame. And now the daily. Daily, same observation here. Same thing. Daily. Well, we have here 2-day range. 2-day range. Market is in balance. We have a 2-day range. We have 2-day range. To the range in one time lower. We have balance, and then we may have continuation or reversal, right? Seems like we're going to have a reversal here. Now, still 40 more minutes to go. And on the month low, where's ending the month low? High. Huh. Has already taken over. Okay, we'll check that. Let me check that. What is the end of the month? Which one? We see 30. This one, right? No, this is end of the month. This is the month high. Look at the excess here. You know, 1, 2, 3 highs all together, and this is very questionable here, an all-time high made during the overnight. The market has failed. No, has looked below the range. And now has re-entered. And let's see if we can get now to the opposite side of this range, right? The market could have been in any direction. What was the number for example? The number said Norman pair also actually. Look at that! Wow! Non-farm pair was actually 254. The forecast was what? This is huge, man. 254 forecast was 150. Twice. That's a big number there. Now, this is good for the Fed, right? Why is it good for the Fed? Because it will allow the Fed, because payrolls remain high, and it will give some room for the Fed to say, you know what? Inflation is coming down. We are not killing the job market. The job market remains okay, and not just okay. It seems like it is strong, right? So we are going to. There's no more need to keep cutting rates at the pace, at the same way we did the last time, right? Which is the only time actually, 50 basis points. You know? Next time maybe. Remember FOMC next week. Probably there's going to be nothing, but next month, right? When we see, there were some comments actually that that odds that it was going to cut another 25 points. Maybe December another 25 as well. But we got really good numbers. No, there's no need, there's no pressure to do something that extreme or keep doing that. It's not. It's not. We just rather keep the rates as they are. But the market has the opposite reaction. It doesn't matter what, this is why it's really important to check what the market does with the number. Okay? And let's forget about what the macro or all that thing is. It doesn't matter. But what matters is what the market does with that number. Right? Now, this actually is not good for the market. But what we are seeing is the opposite. The reaction is the opposite. So it can be an indication that actually inventory may have been getting kind of like too short, right? Remember, we have two ways to see this market. We saw this yesterday. We made this is long liquidation here. This day, you got long liquidation here. This day adds to this. We joined this. And yesterday adds even more. Long liquidation. Long liquidation strengthens the market. Remove some of the weak longs. Shakes the longs, and then the market can rally higher. That was one possibility. There's this thing. Now, something that I observed yesterday also is at the closing we were having these rallies here. This is not the first time. I guess it happened like 2 or 3 times in a row, back to back. There's something like got my attention yesterday. This removal of all these shorts here. The market was getting short at the closing. The same thing here, right? Bigger time frame. And these kind of things also strengthen the market. Of course, after the fact is easy. I knew that, right? But this could have been in the opposite direction as well. The same way that we are, how many points? 100 points basically, 50 points higher. We could have been 50 points lower as well. Okay? This is just not I knew what's going to happen. It could have been anyway. We never know what's going to happen. We have 2-day balance in the daily time frame. This is daily 2-day balance. This is end of the month with the minimal excess here, very questionable. You have a trend here. Have this trend. Laggards here. And what else? I have a gap here. Very questionable. This market is being held by very weak hands. And now the 50, this label, this area here is holding. Okay, this one here, this area, little area here is this area here. This one is this, 50, 40, around that much. Right? This remains as I will carry that level as support. Okay, resistance, we have this one, and this one's very close as well. All right. Very significant gap if it holds until the opening. We talk this break looks like long liquidation and inventory. Right, getting short. It's too short. It's too short. This is in hand size is another thing. No, hand size is easy always. Let's close this one. Let's close this one. Let's close this one. All right, now we have this, only this. You have space. We have a spike base here. This level here is, oh boy. I'm going to, okay. I am keeping this previous last and sellers because I've noticed the market is paying a lot of attention to those areas. All right. I got something here is really important to me. This area here, we have July. This is more relevant because this is a breakout. It comes from very further back in time. It's buying from there. Twice, 2 times has been bought from that level. Support, that's July high. July high. This, we have seen this very questionable. These 2 together, 1, 2 together. This one, the same phenomenon down here. 2 together. It's a lot of single prints here. The single prints here, and questionable high here, and an all-time high that was made during the overnight. The lower side has all this inventory from, I guess, from here. Actually, I don't know. Let's see, from here. All let's change the color. Let's do it. Oh boy, let's do blue because that's overnight. All the way up here. Which is the opening, right? It's overnight. Overnight inventory. Overnight session. Vamos a poner overnight session here. Overnight session is long, and now overnight session here. This thing is holding all this. Yeah, can you imagine? And this is short covering. This is short covering. Short covering. After this market was sold from this level here. And it didn't take, which is L high here. It didn't take that well, right? Now let's check that. Let's put this here. This is market profile. All the things I have. This is how many. How big is this range? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 day range. 11 day range. 11 day range. Market is in balance. Market is in balance. Market is in lower side of the balance. So balance, apply balance guidelines. Now if we break through this, monitor for downside continuation here. We have break. This is the balance, right? This is the balance here. This is the area, the balance. Takes this area, comes down. 1 downside continuation on volume coming here, right? Notice where the volume is. Volume is right above the balance. So this is the lower range, and this is nothing below this. It just dries here. It takes this range out, dries here. It takes the range out, dries here. No? So we have a look below. Now, can we have a potential revisiting the highs or trying to make a new highs? Who knows? I have no freaking idea. Right? That's the thing, right? Failing to attract sellers and re-enter can target the opposite, puts the opposite side of the range as potential destination trade. It doesn't have to happen all today. Okay, we have that. Now, you always keep monitoring. Now, let's check something that's happening here. During this day, we have a spike here. This day, balance value was lower here, and suddenly we have boom, a gigantic spike to the side. That the market is right there again. Look at this. This area here is where the market is at right now. 25 minutes before the opening. Okay, just so you know. Let's keep doing, and this is why it's important to do homework. Okay. What I want to check? Oh, I wanted to check something else. I wanted to check. Ooh, oh my God! Oh, look at this, man! Gosh, look at this. Bonds are actually going lower. Oh, this was yesterday. My bad. This was yesterday. Bonds are breaking below this range. Below this channel. Crude is, oh boy. look at gold. Look at this here. There might be something like this in the future. Now, this is a nice breakout here. I hope you have seen this is a big, nice, beautiful range. Once this was taken, there's a good also market could have come here. I think this is a good trade for dollar. I don't know about crude oil. Maybe, who knows? No, this is very interesting, man. This is really nice here. The dollar. I guess we talk about this too. Now there's potential here in gold. Just sell. The market just keep buying. There's a lot of frenzy relative to gold here. Now bonds are breaking below channel range, right? Let's call it channel range. I don't know what else to call. Gold as potential. The gold is selling mechanically. A very volatile crude. It actually has. Maybe this is because the geopolitical situation, right? Iran and Israel, what's happening? Iran is a big provider of crude oil. Now into today's, we have this. Seems like the market can open up here. This is very curious here. Right? I have this and I have this. Okay, I'm going to have both here. Should I? Nah. Let's take this one off. I don't want to know. I do not want. My charts are too big now. Let's take this. Let's take some. Before doing that, should I save? Yes, I already saved this. All right. Why I had this much? Because I want to see this. Let me show you again. Uh-oh. Please, please. Don't freeze. Please, please, please don't freeze. Oh boy, no. No. Oh, it's frozen. God damn it. Just before the opening. Gosh. This is working. This chat. Oh, it's moving. Instead of doing that, what I'm going to do, I'm going to remove this month. 1, 2, 3, 4. I got this here. I'm going to put this one only this week here. All these ones are going to go away. So I don't have much here, but actually, how many days? Come on, man, really? Yeah, okay, I want to see this FOMC. That's good. The opening, only these two are going to remain. Alright. Now, what matters now? This is for the current session, okay? Come on, I don't like when that happens. Alright. Alright. Upper side we have this. Questionables. We have this one. Followed by this one. Followed by this one. 3 highs continue. This is also very questionable. You know, this one. And the reasons, for the reasons we explained before. Right? Now the lower side. We have something very similar in the lower side, very close together, and especially this level here being used as a support. Okay, I'm going to keep that. I'm going to carry that one. Now we have a spike base here, overnight spike base, overnight spike. It hasn't extended that much from. No, it has extended like twice. It has extended from the original spike. It has extended how much? Like 10 more points. No, but it seems, you know, this is the spike. All this is the spike all the way up to here. From here to here. It seems like it's going to open, the market is going to open somewhere inside the spike. You know? If it opens above, if it opens in this area, that's a strong market. If it opens below, it's a sign of bear, it's a sign of weakness, right? Good weakness here. If it opens inside, that's a neutral, right? That's a neutral. This is when I have most problems. Now, because inside this one can qualify as an inside, and this one can qualify as an inside. And also there are extremes, right? If the market is down here, you can think, yeah, okay, we are going lower, right? But this inside. Same thing goes up here. This is very, very up there. Now we can go high, right? But this is still inside. It's a neutral response, right? Opening above the spike means this market is accepting prices, higher prices and volume is coming, especially if we have volume here. That's a first thing to watch at the opening. First thing to watch at the opening. Now, it is hard for people to follow the market. Well, the market is going higher now, right? Oh, the market is too high, I have to be short. Because the market is going to reverse and it's going to keep going lower. Now, gaps are starting to change too. Remember, yesterday we talked about the gap. I know that traders see the opening as a gap. There was no gap yesterday. It opened below saddle, but there was no gap. There was no gap. Because the market actually opened inside yesterday's range. Huh? Inside yesterday, inside previous day range. Now we have a gap. We have a from here. All this area, wherever the market opens, it seems like it's right now it's here, right around this area here. This is the gap here, right? And the gap actually is not from here. It's not this one. This one here. It's not. This one is the gap. This one here. Because what we do is measure gaps from this high here. Why it becomes relevant when the market comes back in here, comes back inside this range, for example. Let's pretend the market has come back inside this range, inside yesterday's range, inside this range. Let me remove all this thing here. Now we know, right? We know we have to. See, this is a gap, and this is short-term traders see this is a gap from here. Some will measure from here, another ones will measure from here. If the market comes back inside previous day range, which is, which is all this, many traders will see that if you are using this, oh, we still have a gap, right? The market is going higher, but actually coming back inside here, below this range, can target this. And you know that once the market is doing this, right? While traders are still buying, thinking, okay, the gap is here, I'm going to keep buying, right? I'm going to keep buying. The gap is open, the market is strong. You are noticing sign of weakness. The market is actually showing sign of weakness there. It doesn't mean that it's going to come back all the way to the other side right away, or even same day, or the next day, or any matter the next week. I'm not saying that. Right? It is just it's a thing of monitoring the market, knowing what to do. But because what can happen, for example, is we have this. We may have days like this, right? Comes down, looks back inside, might target this one, and start turning back and forth, back and forth, back and forth. The same thing can happen here. It's way all the way there, and then start turning back and forth, back and forth. Who knows? I don't know what the market is going to do. I have no idea what the market is going to do. Remember that. This may be considered sign of weakness because traders are trading since this time. Maybe even from here. Notice also where all this is coming from. The saddle is down here. Overnight inventory, most of the inventory is low. Remember this day as well, we have a profile overnight session, kind of like this much of a range, and this high came exactly from what was at the time overnight POC. That's why I have it hit labeled as an overnight period. It's a very weakness. And notice how many days has passed before the market take notice of doing anything. So were you selling here, for example, yesterday? Were you selling here, trying to market going lower? Completely. No, I would not want to see. I don't want to see ignorant, but just without noticing what happened during this day, for example, right? During this break here, the market completely ignored the overnight inventory. Those things help, right? Doesn't have to happen right away. It happened 1, 2, 3 days. The market took 3 days there. And, going back to the homework. Oh boy, I didn't do. I have a lot of things here. Let's erase. I was kind of like verbalizing what I was thinking. Oh, am I not right? The whole thing, but and I do this. This is not what actually there. I do this trading here. What? Trade psychology. What the heck? Trade psychology, pattern, building, simple rules. Oh, trade journal here. So trade journal. Currently, for today, currently, we have a overnight spike. Previous upside spike is now resistance is this spike from this day, this one here. You know what happened here during M? If you open your charts, you'll see what happened here, and the market has found support or resistance in this case right there. Significant. This is a very significant gap. There are 9 minutes before the opening. This area, I pay attention to this area here, and this area here, and of course this one here. Okay, trading back and forth from these ones. It's just curious, right? This 50 here. What we have here? 52. It's 2 here. What? Just around. Just in between here. It seems like this high is being the one, right? Huh? This one. What do we have there? $56, $55. Call it 50. It's, don't try to be too exact, right? 55.25. This is an area here, right? I have this area here highlighted because what I saw here, alright, I saw this here. If the market was going to build something to the upside, this gap would remain open. I mean, this single distribution would remain. Come on, dog. What happened? Stay. Relax. Easy. I'm talking here. This is the dog just go crazy when she sees somebody outside. Alright. Where I was? Oh, right? It did not, this distribution did not, this distribution was close, but, and notice where buying came from, started from half back, right? This was corrected the next day, but what it did actually, it just moved this, the weakness that you have in this area to this one, right? Now to those July high. Markets are very visual. Markets will find an area and use that area that to as a support resistance, but very visual. Keep in mind that, right? Why this area? Because we have seen that here, right? This is July high here, the same reference here. Now we have a questionable low here. Doesn't mean I have to sell from that area, or I will say that this market is just this buying is irrelevant. I'm not saying that. Yeah? Significant number before the opening. I guess that's the only thing that I am checking now. Alright, let's get ready for the open. And there is a lot of things that can happen. I'll close this. What's happening in Nasdaq? Nasdaq also. Whoa, man. Something that I have noticed today, for example, yesterday, Nasdaq was the same thing. Long liquidation, accumulation, making this bulls bigger, right? If I join this, if I join these 3 days, it will look like long liquidation, clear long liquidation. And the nuance in Nasdaq was the Nasdaq actually ended one time frame lower. We have an inside bar and the high was taken. That's the first thing I've noticed yesterday. I mean today, coming into the market, right? And it closed. Nasdaq closed at right at halfback. For practical purposes, this is halfback for Nasdaq. Coming up there, down here is the same for Nasdaq. I notice where this high is. Notice this rally we have here, right to this low, very mechanical here. This high has been taken. This is 10-2 high, right? Is it? Oh, this is 10-3 high. Oh, this is yesterday. 10-3 high. And notice where this high is. Nasdaq has better odds to keep going higher here. Notice where this volume is being. Oh boy. Oh boy. No, this is at the high. This is at the highs. This is at the highs here. This is selling from this high here. This. No, I don't want to be a seller here. Don't want. What I'm doing here, I'm watching the upside. Okay, the market's to the upside. We have a gap. The market is opening inside the spike, inside the overnight spike, and we have this high as a potential support resistance here, right? After that continuation, we may have some back and forth, some selling coming from here maybe, but if this area is taken, watch out. I guess I will wait for this area or this one. There's a lot of things now going on. Let's open this. Let's expand this profile again. Actually, I want to open this one here. Let's expand this one. What we have here, all these shorts here. Markets, trades were selling. Each time they sold, they have less and less and less, right? They have some relief here, but it couldn't extend. Couldn't take the daily low here. By the way, notice where this daily low is, right? And the short covering, the final comes right from halfback, previous halfback, which is not a good indication for buying, right? The kind of traders that are behind the movement. I don't have a good feeling. I guess I'm going to take those words back. It's an indication who is behind, who I am competing against. Okay, who's buying? Who buys from here? Who buys from here? All right, very mechanical way to buy. But now, these guys, and these guys, whoever is here that was short in the market yesterday, they're well underwater here. All right, and it's not. Oh, by the way, this spike. Look at where this spike is. 5,800. Market has stopped it right there, 5,800. That's another thing, right? Another sign of mechanical trading right there. Okay, less than a minute from the opening. Let's see this let's see what this market has for us. And market is open. All right. Last is also overnight spike base. M high has been taken. All this was below M from this day, which was a high. Now the one is 59. This how much are the 58s? Today's 58s. 11. God damn it. I don't like that. I don't like this course 58. I don't like the fact that it's right at 58. Okay, if that number, if this spike was a different number, maybe 10 or 90, I would see that as a different, because that's an area where traders usually take profits, right? Leave that area alone, and then if there is something on the upper side, they just remove themselves from the market and may come back after that. Now let's see how much low. This is 11 points. So it's not cheap here. This is not cheap. Yesterday, very close to the close, options that were 10 points away from the strike price were 20 points higher. That was crazy. So very expensive. I mean, and the options were, the daily options expiring yesterday. I didn't like that. I want to keep this period inside. This volume is taking out, this one is taking out. What remains is just what we have above this area. Remember, you have seller here, overnight inventory here, very long here. Market is inside the single prints. Market needs nothing, really, absolutely nothing to take this area. out, this one out. Look what we have. No volume here, right? Whites here. There's no volume here. So the market basically needs just a little bit of a strength here, a little bit of volume to target this one here. Right at the center of the range, kind of like about the center, right? I don't know why I have this. I've just highlighted this. I forget what. I remember saying I'm going to put this because I don't want to forget. Now I see this, but I don't know why. Oh, what's this high, right? What's this high here? This one. Very mechanical buying here, coming. You can have a long here. Is this area is taking, short-term trading mindset, momentum trading mindset. That's what momentum traders do. Oh boy, look at the volume, man. This is not good. I thought we were going to open it kind of higher here. And this one is really low, 80, not even 100. Come on, man. Not even 100. Boy, this is not good. When we have a strong markets, this is 150, 200. And on this period, this is spikes. They didn't attract that much volume. Regardless, we have a market to the upside. We have an upside market today. Oh. It's a market to the upside, okay? So far, I'm making a really early assessment of what kind of market is. And a market to the upside, 6 minutes into the opening. So it's a buy the dip market right now. There's a first dip that was being bought. Right from where? Like why you buy here? Oh, look at that. Do you see how far this one? How fast do you have this thing? It was up here and boom, right now. It come 6 points in a blink of an eye. Huh. Actually, that's a good sign for the upside. If it doesn't have continuation, that's good. So this shaking the longs there. But because this low was bought from this K, very mechanical thing, right? There's a lot of things that happens when we have this kind of significant gap. There's a lot of things that happen. What other things happening here? Some rebalancing, overnight shorts, all these traders are underwater. Look, it's this gigantic value area. They're underwater now. So how do you get out of your position? Right? Look at this shape. Long liquidation. Accumulated value area. And let's see, some traders will watch this thing. And this is POC. Oh, look at that. This POC. Oh my God, look at this. This highlighted area is where POC is. This one and this one. Oh boy. Is it? Oh God. Wow. What the fuck? What the hell we do have 30 here? What? Knight 30? I apologize for the language. What what that Knight 30 is doing there? What the heck? It is labeled as Knight 30. And actually Knight 30 I think was Monday. Oh, I need to do, maybe I need to do some adjustments here. Man, I hate when this happens. This is really a distraction here. This is a glitch. This is supposed to be here. Okay. Hate this. Oh, come on, man. There's something I don't need it. I didn't need it. Oh. I apologize. Oh, look at the high. Look at the current bar high. Right for on the 58, right? Right at 58. The low, right at M high. A rally high from the day when we had the big break. And this one is not working. Gosh, man. Making new highs today actually is retaking the trend line. Man, I hate this. Sometimes the window trader is just like that, man. Oh, all right. Let's see if this one is better. All right, this is better now. All like that. Then I'm going to close this. Let me close that. Of course, I missed something here. Oh, look at this is nice. It has taken this. Oh. Okay. Okay, now I think this is 58. How much are the 58s now? 11. God damn it. The all-time high 58.30. How much are those 2 points? No. How many trades have you made? How many times you were long because you were looking for continuation? How many times you were short because you thought the market was too long? Prices are too high. This market has to come back, right? That has to come up. Check this out. We have some 8s here, some 4 digits here. As I say, it looks like profit taking here. 5,800 right there. why you have this shadow area. Oh, that was the accumulated value area. If you, I guess traders use, come on, settings, go some more, log chart, CME, central last, no, I don't want that. Cumulative settings, oh, pick on values. Let me just use this thing. You will see some pick and values here on the side. I don't know how long it's going to take to upload. It's a cumulative. There's a lot of craziness, a lot of things that are going on now, right? These shorts, meeting, margin calls, momentum traders getting longs taking profits. There's a lot of things, rebalancing happening, hedges being removed. There's a lot of things going on here. I know. So why you want to complicate yourself? Dog side right, lots today 10. Oh, okay. Let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I don't know. I never saw this. What is this? Light, near color, far color, lighter. Okay. Color, value, 75%. Okay. It's not showing. I don't know what's happened. I don't know why this was there. I have no idea what that is. I'll save it just in case. I'm going to save this one also. Just in case. Now we have balance here. Really nice balance now. This is the 5 minutes. You have bar, an outside bar, and the inside balance. Then balance is, the balance is contra is shrinking. We have an inside bar, a smaller inside bar. Check your 5 minutes. What the bonds are doing now? Oh, look at this, man. Look at this. Bonds are long liquidation. It looks like long liquidation. Gold is recovering. Dollar is a nice rally here. It's quite dangerous here. This is very. These are divergent markets here. Bonds doing one thing, and market doing the opposite. It will either the bonds reverse or the market will go in the opposite direction. Now, why it's important that you do your own assessment? Because when I speak, it's reverse, it's going to reverse, or we're going to meet. Look at this. This level is gaining importance. It's going to one is going to meet the other one. I may be thinking in one time frame, right? But you may be hitting in another time frame. Look at this. Look at this level here. Right 90. Okay. Really nice. You have 10,000. 5 digits, we have 1,000 here, 4 digits. This is cool, but we still don't have direction. This is pressures to the upside here. Look at this. This is not negative. All these are negative. All the way around. Above is negative, below is negative, mostly, right? And the center is you have kind of like a buying, some buying going on there. And doesn't mean that it's going to go higher. Okay? I'm not saying that. But this level is gaining some relevance here. That's 90. Check your 5 minutes charts. I'm going to put this one. Let me put this thing here. Where are you? Okay, 5 day, 5 minutes. I'm going to detach here. Market monitor. Okay. I'm going to make this a little short here. I don't need that much. Let's put it here. Look at the overline. Big spike there. This is where's the basis spike? This is the basis. What is the basis spike? Is this? This is the basis spike. Right? Range is contracting. Everyone is watching this. We will have something here coming, either to the upside, to the downside. I'm going to be long. I am going to be short. This market is going high. This market is going low. It's just perfect. It's just perfect here. Grab your name. Call it bullish. Call it bearish. Whatever. I'm looking to the upside. How much are the 58s? Damn, a little bit cheaper, but it's still expensive, man. Yeah, I think this is expensive. I'm going to put this at high. I think this is expensive. I don't like that much. It's too high. And if I want to get something higher, right there we have this 58.10. There's not really much here going on. Now this has been corrected. Let's take the other side away. We have an inside bar, and now we're going to have an outside. Who knows? Mark. I'm going to mark here the 59.90. Oh, now I want another one. Because what I have seen here, this is really high volume. This is the field speed. They have 10,000. There's a lot there. This has been taken. Now let's take the other one. The buying here, I'm the kind of buyers that are buying this market right from this high here. I mean this because it's very visual, right? If I open this chart, this is a couple days ago, right? You can see this level here. Can you? Right? You can see this level. I can see everybody can. So who's buying? That's the question. This one, no. The other one could be this one here, and that's why I say this is 59. I mean the 5800. This one is this level here. This is the run off period, M and N actually. What time is this? Oh, that actually is before 4. Huh. I don't know why I have this high here. Mine is different. You know what I mean? Right? Come on, Doc. Okay. Buying again from the same area. Now I am going to let this go. No, still no. I want to see this thing here. Now I have M high the next day. Why? No, this is actually 73. What do I need this? Nah, this is not. Well, okay. What it was, 73? No, it wasn't either. Well, I am watching now. I'm still watching to the upside. I want to see. It's just a couple minutes before the market closes, before the current period closes, and the gap is still there. This is multiple reference, multiple. This is last two. Look at that. Gap is just about to be closed. The gap is here. 70. So it came like just a one tick from closing the gap. Gap has been closed officially. Gap is closed. Gap has been closed. Look at the pressure here. It's just different than this one here. Where is the 1000 here? This was positive, right? This was positive here. Big volume and nice here. Can you see this level was actually relevant here. Those loans are out now. Couple minutes before the closing, though the current period, but that low is not good. I don't know why I have this mark. Completely forgot about that. now the 58 looks better now. 6 points. Can you see how if the bonds, the bond market is actually breaking? It's actually breaking. It is the ES and Nasdaq who actually are closing towards or joining bonds, right? Not the other way around. There is still a divergence. There is still a divergence there, unless the market takes yesterday's low out. That's when they will be in sync. Look at that, huh? Look at that. Now, I was watching the upper side. The fact that the market has closed the gap actually makes me switch my view to the downside, to this side now. Instead of looking at this high, what I am looking at is this one. 57.30. Again, I guess 57.50 is okay. Can somebody tell me what the heck is this? This one here. 57.68. What the heck is that? I don't know why. How? Maybe this high is here. Oh, okay. Was this high? No. This low? Yeah, this area was being bought. Okay, this is an area that was used as a support or resistance. Yeah, that's why I have this thing. Oh, come on, man. I guess I grabbed that from the daily. Did I? Yeah. Very mechanical. And that's how markets work, right? Or traders do their work. We have an upside day. The current action is to the downside. Remember what traders do when the day is to the upside? Buy the dips, right? Closing the gap is a sign that the market lacks conviction of the movement. Conviction in the movement. The movements to the upside. The market lacks conviction. We talk about how little this volume is. 89 is not that much. It's not convincing. It's not strong. Market open at the center of the spike. Which is for me hard times. I have tried those days before. I failed most of them. A neutral point of view, with the market opening to the upside, right? With an upside movement. For the day to change, okay, so far we have value up here. For the day to change, this blue highlighted area needs to come back at least inside here. If the market keeps coming lower and lower and lower, but this area remains higher, we may have something else. We have some short-coming rally, a strong one. I mean, that was the case. And now another thing is, let's open this. In these days, back-to-back rallies here, short-coming rallies here, and here as well. I think even this one, I don't know. I don't remember this one. I don't remember this now. But traders remember what happened before. They have a tendency to repeat what was happening. We know also that all of this movement to the outside came from saddle. It was bought exactly from saddle to the tick. Right? To the tick, exactly from hard back as well. Now this is a bear flag. If it was to the upside, it would have been a bull flag. Man, that's how crazy this is. Video. Very questionable law here. Now, there is no conviction with this thing, right? We have another scenario here. We have a value higher, right? What happens if this keeps going higher and trades are used now? Okay, there is some rally at the closing. You have M and then we have boom, we have a rally, short cover rally. We are witnessing the lack of conviction of the movement, gap being closed. Remember what we talked in the morning when we were doing our homework. What can happen? The gap has been closed. All the traders will see that the gap is still open. The gap has been closed, and they will be buying here, buying, right? Short-term buying, weak buying coming into the market. I'm not saying that's going to happen because nobody knows what's going to happen. But if that's the case, instead of having a short cover rally as we were having the last couple of days, we may have something like that, but then reverse really quick. I have seen that happen also. That happens all the time, man. Very questionable. Are they going to sell from hardback? And notice where the hardback is. The same level. Oh, come on, man. Sometimes, my bad. Sometimes people just get so tired, right? Frustrated of this kind of behavior. Okay, let's check. Cosby, let's not lose sight of longer trend. Elijah, rate are going to come down a lot lower next year. Now they are changing, right? They were saying things that rates are going to come in lower. Now they are saying not now, right? Next year they're coming low. Look at where this work is selling from. How back here? Same thing happened here yesterday. Now if you remember. I don't know what I was talking. I like these boxes here. That's kind of like a little news, not relevant news. And if you have noticed, I have those ones, maybe one or these pop-ups one or twice a day, which is the right amount, not much. You don't need that much. traders are being used to sell rallies. The whole spike has been taken out. The actions to the downside. Look at that, man. Oh, that overnight inventory is long. Most of them coming from Settle. Remember that. Now the gap has been closed in the first period. That also is relevant. It was closed right away. I have checked volume. Oh, look at this volume. Really good volume here. Huh. This might be a need. This might be a need to go short here. Market must be maybe the last, yeah. Market has re-entered. The average value hasn't get inside yesterday's value yet. FOMC high again is being used as a level to buy. This one here. Remember, the buyers who see this as a gap yet, the gap has been closed long time ago. That's the thing, right? That's a misleading thing, right? When you grab the wrong reference, the gap has been closed. But many traders see this market as a still as a gap with the gap to the upside. Now, by the time they see the market, the gap closed, they are late to the party. This 50 are still in play, right? They went on from 5 to 12. Gosh, man, I didn't get those ones because I was watching to the upside here. I have mixed it. Go with the markets, they say. Volume is higher, man. Volume. You have this movement has volume relative to yesterday. This day is higher, way higher. Look at Nasdaq, where the low is right at overnight POC. Very technical trading, huh? Fails to get back inside this range. Once the range is broken, the inside bar is taken to the downside, and then it's the second time is sold just before this. This is a stop. Very technical trading here. I don't know what the heck is this. This is the base of the spike. I hope C doesn't wander too far from yesterday's high. So let's see if there is something there we can use. Closing the gap is a sign of weakness. Oh, by the way, again, notice how B extends to the downside just enough to move hard back right to yesterday's high. That happens. Oh, it's happening over. I need to internalize that, because I realized I see that kind of like a. I am monitoring that behavior. Okay, I'm monitoring that behavior. Look at where the market is right now, held back, and it is yesterday's high. Just enough, right there. Just enough. The market moves to the downside, or has downside extension just to move held back, current period held back. It can be current period held back or daily held back, right to where important or relevant reference is. In this case, current period held back. Coming out of the range. Are you short? In a market with value higher? We talk about how this is by the deep market today. Or at least this is what we saw was says, and feels, I guess it feels 10 minutes, something like that, 6 to 10 minutes, very early in the session. Notice how far the market has retraced. Okay, how far the retracement is, really deep into the current period. Selling is coming from daily holdback. Okay. The most I'm not watching that. What I'm watching now is that the market has got out of yesterday, or out of the 2-day balance. Okay, I'm going to highlight that. Another highlight here. That area. That's 2-day balance. That's balance inside balance. That's a balance inside inside the wider range balance. Inside the 11-day range. I'm going to take a break. I feel tired. I feel tired, man. I am really tired. My one of my rules is, if I cannot, if I don't feel rested, I just go to, have to rest, man. I may lose an opportunity, maybe, but who cares? So what, right? The market is not going anywhere. It's going to be there when I come back. There might be another opportunities. There will be more opportunities down the road. Alright, unless you have any questions, I'm going to call it a day here. Okay, guys. I hope you have a wonderful rest of the day. Stay safe. See you tomorrow or next week. This is a mixed market here. Bonds remain to the downside. Bonds also have a tiny gap there. No, bonds have gap actually to the downside, not to the upside, to the downside. There's some sign of weakness there. Let's check the other markets. Look at look at this. Look at this. This is. I mean, all of them did the same, right? Took this highs, stops out. All of them doing the same. All of them do the same. When they all do the same, the movement has some strength. All right. What is the movement? Is the question, right? What is the movement? And that's an assessment you got to do. You have to do that. Oh, has this market just had some downside station? I didn't see this one coming. Oh, it's coming, but yeah, it is having downside continuation. Right. Close to the close of the current period. It's right at the lower side of the range. Nasdaq has a very questionable low here. It's getting deeper, right? As first get us gotten into the accumulated value area. Next thing, let's see the market gets inside this, and next thing inside this well here. All right. Have a wonderful rest of the day. I want to stay here. I want to stay here. No, I'm tired. God damn. I feel like something may happen here. I was wondering, like, can this market or can the next period can see open kind of relatively close to this high? This is many references together here. This yesterday's high is also last, is also overnight spike base here. Opening above or below can be something here. Not the fact that it opens above or below, but what does alter that. You know, you start going higher, that can be support. If it opens below, I cannot get above. There could be some continuation to the downside. I could use that level, that area, as as a way to monitor the market for continuation here. Here, for example, if it opens down here is one thing, and another thing open is kind of close here and kind of having a small rally here, but not taking this A high. I'm not taking this A high. Because I can use that in the same way as we had here, what it was, I think it was here, right? This distribution here, this range here, this can be used, you know. It closes, well, I'm out. I don't want to know anything about that. If it closes, it comes down, closes, I'm out. That's my out. It doesn't matter if the market can one tick lower and the market comes back all the way up here. No, that's my trade needs this to remain open. Right? Same thing here, same potential scenario here in what we are watching here, but this time in the opposite direction. Right? I'm trading against what the market is doing. Right? Because we have an upside market, an upside day. No traders are buying dips here, but I may say traders are pros. Right? May be buying dips here. Potential destination on the upper side is this 57.90. Is something huge start to appear? That's an out. No, it's not doing. It seems like it's not going to give me that chance. It's kind of like a very emotional now. The potential destination of this moment can be set up here, this area. Now let's see, it did not take the overnight high. Let's see if we can take the overnight low. Alright, have a wonderful rest of the day. I did not have a chance, I don't have the opportunity here. That thing that was, if I look for a trade, I will find a trade. Okay? That's for sure. I will find a trade. Most often than not, that will be a wrong one. Okay. Have a wonderful rest of the day. Stay safe. See you next week. Hope I can see you next week. Bye bye.